Welcome back, everyone. Joining us to discuss the economic and business consequences of COVID-19 and how social media is playing a key role in public sentiment like never before is Karen Harris. She's the managing director of Bain & Company's Macro Trends Group. Thanks for being here today, Karen.
Thanks for having me.
All right, so when it comes to the business impact here, making data-driven decisions is so important. So with the data that you have right now, what type of response is warranted in reaction to this crisis that we're seeing for businesses?
So we look at the data really through three lenses, which is what we would think that business people and investors should look through. The first is the science, the factual science. The second is the government reaction. What is the public policy going to be around how to manage the crisis? And the third is the public reaction to that. And as you mentioned in your introduction, it's really this third lens that is the biggest difference in this crisis than what we've seen in prior crises. When SARS happened in 2003, it was prior to the advent of really strong social media. China's economy was, yes, much smaller, but also the number of the percent of internet penetration in China was much, much lower. Today we're operating in an environment where, well, we make fun of the millennials a little bit at times for their putting their every meal they eat on the internet, but this could be the first crisis that people document live as they go through it, and it will be far more public in that sense. And so the reaction could be quite constrained if we continue to see doctors on TV and the message is, this is just the flu. And that will keep markets orderly, it will keep reaction orderly. That's not to say optimistic, but orderly. If a video that's real or fake goes viral about someone having a dramatically bad reaction or someone famous contracts the disease, or we could see a very different swing in the epidemic. So we are alert to and looking at those public sentiments as a very important reaction. You had asked about how businesses should react, and today Bain has created what we call the SITREP, a situation response index, and we just raised that from a 4 to a 5 this week. And what that means is we're really looking today at a reaction similar to what our clients would have for a mild recession. So let's count on the fact that this is going to be a moderate 1 to 2 quarter recession-like actions today. On top of that, of course, every business is thinking about their people and how to manage and keep them safe in this environment. That, I think, goes without saying, but certainly we haven't heard a business executive anywhere who doesn't put their people front and center. But on top of that, the economic reaction is that more bounded one.
So when businesses are weighing what response they should take, clearly it seems like at this point we know that there is going to be an impact on financials to some extent, but how do companies best position themselves to come out of the other side of this crisis?
Right. So when Bain looks at even a recession or a crisis, when we think about how do you thrive or win in a downturn, there are activities that you take to think about cash management, where you want to be after the crisis. So it never pays to react sharply and shortly and in a panic in one's life, in one's business, really thinking about what are the resources we need to keep our business on a steady course through this, but also where do we want to invest now to continue to grow and thrive beyond this crisis. The place where probably the most concern now in terms of sentiment is the U.S. economy has really been growing, certainly consumer spend has been growing off the affluent sector. It's really been the spend of the more affluent, the top 20% of the population that's kept the economy above water in some senses over the last few months. We, with Dynata, have a proprietary index that Bain & Company, it's our consumer health index. And what we've seen is, first, that sentiment is almost perfectly correlated with markets, which we saw last week. Were not performing at their best. Today seem to be recovering. But with markets going down, the optimism of that group goes down, and therefore their intent to spend and their actions change. And so we're monitoring that very closely over the next couple of weeks.
Well, we know this is a very fluid situation, but sounds like it's definitely time for businesses to have a response that's appropriate to the severity of the crisis. So we'll definitely keep tabs on this. Thanks so much for sharing with us today, Karen.
Thank you.
All right, and when we return, we're sitting down with Crane Shares to talk about emerging trends in the China internet space as a result of the virus, from e-commerce to education. We'll be right back.